ChargePoint stock is down 77% in the past 6 months, and a lot of us, myself included, are wondering if there's still hope for a recovery in the stock or if it's going to continue moving lower. To best answer this question, I think we need to review the factors that have led to ChargePoint and their stock getting to where it is today, and that way we can see exactly what needs to happen to see a recovery in this stock. First of all, one of the things that's caught me off guard, and probably a lot of other investors as well, is some of these impairment charges that ChargePoint has been making these past couple of quarters related to their inventory. We've seen a $28 million impairment charge taken in the second quarter this year, and then a $42 million impairment charge now that we've seen the quarter 3 preliminary results. These impairment charges are related to some of the components ChargePoint was purchasing in the past at prices that were a lot higher than what they are worth today. When the supply chain was under a lot of stress, the prices for these components was a lot higher than what it is today, and because ChargePoint was still purchasing those components at those high prices, the inventory they still have on hand from that time, it's no longer worth what it was when they purchased it. And now they had to take these impairment charges in order to actually have an accurate representation of what the inventory on hand actually is worth. Alongside that, inflation has also been a big problem, and that too has pushed the prices for these components upward and made ChargePoint either need to sell their hardware at a higher price, making it less competitive, or stick to the same prices but have lower margins. So overall, it's just not beneficial for ChargePoint when the cost of their materials, cost of their components ends up increasing. Of course, the Fed has been fighting the inflation with higher interest rates, so that has helped out on that front, but these higher interest rates are now having their own effect on ChargePoint because ChargePoint is still not a profitable company. They're still relying on external sources of funding to continue their business operations, and with the interest rates being a lot higher now, it's become a whole lot more expensive for ChargePoint to gain additional funding. And this is affecting the whole economy, of course. It goes beyond just ChargePoint. We've also seen a slowdown in EV sales as people are just not buying as many new vehicles with these higher interest rates. And this has got to be affecting the potential customers of ChargePoint who would actually be buying these chargers themselves, because it can get pretty expensive to be buying some of these chargers. And a lot of those businesses, they're probably not really in a situation where it's feasible for them to invest in new chargers. There's also been increasing competition in the EV charging industry, and most notably to me is Tesla's charging business, and this really starts with the North American Charging Standard, or the NACS connector that Tesla has created as a standard for North American EV charging. On one hand, this could positively affect ChargePoint because a lot of Tesla drivers would no longer need to use an adapter to charge at ChargePoint's stations. But as far as I know, every Tesla already comes with a J1772 adapter, so it's not really that high of a barrier to entry. The only thing might be the CCS connector, but as far as I know, there's already adapters there, although they don't come with Teslas, so you'd have to buy those separate, but still, it's just not that much of a barrier to entry. There's still plenty of Tesla drivers already using ChargePoint's stations. On the other hand, this could turn out to be a negative for ChargePoint, because all of those non-Tesla EV drivers, they've been stuck using companies like ChargePoint or Electrify America, EVgo, whoever. They haven't been able to use Tesla's chargers up until now, or at least, next year once this support for the North American Charging Standard really starts to roll out. So it's going to be an interesting dynamic in the charging industry. It's still kind of an uncertain thing how it will actually affect everything in the long run, because it still just hasn't really happened yet. So we're going to have to wait until next year and probably the next few years to really see how everything ends up settling. Another thing Tesla is doing is they're implementing payment capabilities into their level 2 charging hardware. Those wall connectors they sell, those are already at a very competitive price, in my opinion, for the hardware. And a lot of people, they say that you should compare those to ChargePoint's Home Flex charger, because that's the fair comparison, because this is ChargePoint's home product, and that's also Tesla's home product. But unless I'm missing something, I don't know, I feel like I'm going crazy here, but Tesla, their wall connector, that is the same unit whether it's for home charging or if it's for public charging. It's the same unit, it's the same price no matter who's buying it. So it's still a fair comparison, as far as I can tell, to use Tesla's wall connector compared to ChargePoint's public level 2 chargers. And that difference in price is pretty significant in my opinion. As far as I know, they're not increasing the price now that they're adding the payment capability. It's going to be the same price, and they say there's not going to be any additional monthly fees or anything like that associated with that payment capability as well. So it seems like Tesla's wall connector is going to become a very viable option for businesses to use if they're looking to have their own EV charging business. And this is pretty much the exact market ChargePoint is targeting. And the final thing related to Tesla is that they are now selling their DC fast charging hardware to other companies. Their supercharger hardware. And this is exactly what ChargePoint does. They manufacture the DC fast charging hardware and then they sell it to another company that goes on to own and operate it themselves. We first saw this with Tesla and BP in their deal with some of those chargers. But then a couple weeks later, we saw Tesla have a deal with the EG Group, a British fuel operator. So another very similar deal back to back pretty much with Tesla. So it seems like this is going to be a mainstay business for them going forward, selling DC fast charging hardware and increasingly getting more and more into ChargePoint's territory, competing more directly with ChargePoint. Now, the most recent news that's been dragging down ChargePoint's stock price was their preliminary Q3 results, and that came in much lower than what ChargePoint itself was previously guiding for, and of course what other analysts were expecting as well. ChargePoint is now expecting their revenues for the third quarter to be about 30% lower than what they were previously guiding for. Their gross margins are also going to be missing the target as well by a little bit. And then also that $42 million inventory impairment charge was thrown in there as well. That one caught me off guard. I don't know how many other investors were expecting that one. But all of these things put together from those preliminary Q3 earnings, those have really been dragging down ChargePoint's stock price over the past couple of weeks here. But on the same day ChargePoint released those preliminary results, they also made changes to their executive leadership, the biggest one being removing Pasquale Romano as the CEO of the company and replacing him with Rick Wilmer. He's going to be serving as the new CEO of ChargePoint, and alongside that, the CFO, Rex Jackson, he left the company. It seems like that was on his own terms, probably corresponded to Pasquale Romano being removed from the company. But Rex Jackson, he's been replaced with Manzi Katani. She'll be serving as the new interim CFO, so not a permanent replacement there, but still, those changes have definitely been shaking up ChargePoint stock as well. Now, as far as what needs to happen to see a recovery in ChargePoint stock, the biggest one, in my opinion, would be the overall economy. We need to see that turn around. Interest rates need to be lower to make borrowing money cheaper and make it less expensive for ChargePoint to raise new funding. And that would help out across the board. We would see more EV demand as interest rates come down, and that would also affect ChargePoint's customers as well. It would make it more feasible for them to make the investments into ChargePoint's hardware. Another thing that'll need to happen is Rick Wilmer will have to prove himself as being a good CEO for ChargePoint, and that'll help boost investors' confidence in the management and in the company overall. Another thing I believe could help ChargePoint, at least in the long run, would be owning some of their hardware instead of just selling it like they do today. I actually just made a video all about this topic, about why ChargePoint maybe has stayed away from this in the past, and whether or not they should move into this business in the future. So be sure to check that video out next. I'll see all of you over there, and thank you guys for watching.